Ladies and gentlemen, good day and welcome to the Q4 and FY2025 earnings conference call of Wonderla Holidays Limited, hosted by Ambit Capital Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Khanna from Ambit Capital Private Limited. Thank you, and over to you.
Thank you, and good afternoon, everyone. On behalf of Ambit Capital, I would like to welcome you all to the 4Q and full year FY25 earnings conference call for Wonderla Holidays Limited. From the management, we have with us Mr. Arun Chittilappilly, Managing Director, Mr. Saji Louis, CFO, and Mr. Dhiren Chaudhary, Chief Operating Officer of the company. We would like to now begin the call with opening remarks from the management, post which we will have the forum open for an interactive question and answer session. Thank you, and over to you, Arun and Saji.
Thank you, Karan. Good afternoon, everyone. On behalf of Wonderla, I would like to welcome all of you to our Q4 and FY25 financial results. Joining me today are our CFO, Saji, and our COO, Dhiren. I trust you have had a chance to review your results and investor presentation. FY25 was a year of resilience and strategic recalibration for Wonderla as we have completed 25 years of operations. And we are proud to have achieved that milestone and having served over 43+ million guests across our parks. This year, we have expanded our park portfolio with the launch of our fourth park in Bhubaneswar. Also, we completed a QIP and raising over around 540 crores, which was another milestone. And we got a lot of interest from marquee investors, reaffirming the market confidence in our growth prospects. We are confident that our strong fundamentals, relentless focus on guest experience, and bold investments in new locations and formats will help us shape the next chapter of our growth. We ended the financial year 2025 with 482.78 crores of total income, and we recorded about 107.5 crores of revenue. In Q4, we recorded 107.5 crores of revenue and with nearly 6.8 lakh footfall, with our Hyderabad park delivering its highest ever annual revenue, a clear testament to our regional strategy and operational excellence. Our EBITDA margin was recorded at 28% for Q4 FY25 and 36% for the full year. Notably, we saw a slight degrowth in revenue and footfall because of unpredictable market conditions and temporary softening of discretionary spend. Despite these challenges, we welcomed over 30 lakh guests, a strong indicator of our brand's enduring relevance and shared experiences. Another key highlight of this year was the consistent improvement in online bookings, presently 57% in Q4 and 45% for the whole year as a percentage to the general footfall, reflecting the digital affinity and is in line with our digital transformation journey. This was supplemented by various digital campaigns delivered in the financial year. As part of our commitment to innovation and delivering unforgettable experiences, we also launched a one-of-its-kind attraction, Mission Interstellar at Bangalore. It boasts India's largest curved LED-based immersive ride and the next generation of cinematic space ride technology. We are also in the process of introducing Kerala's first bungee jump attraction in Kochi. We have been also recognized by Times now as one of the top 8 adventure parks around the world. We remain confident in sustaining our footfalls and revenue over the medium to long term, supported by continuous innovation and strategic initiatives. We are also placing greater emphasis on growing non-ticket revenue streams. Enhancement to our non-ticket revenue offerings, along with an expanded merchandise strategy, is expected to contribute meaningfully to our overall revenue mix going forward. Our spend per head, or SPH, has shown continuous growth, 11 and 12% for Q4 and FY25 respectively. We expect it to grow further. From the project side, we are moving towards delivering our fifth park at Chennai, which will also be one of our largest towards the end of Q3 FY26. And we are also launching Isle by Wonderla, a 39-key premium resort offering in Q1 FY26. We are also confident that our focus on enhancing the guest experiences, fostering innovation, and strategically expanding our offerings will drive not just growth but sustain excellence. We are immensely grateful to the dedication of our team, our customers, and steadfast support of our shareholders. With this, I would conclude, and I'll hand over to Saji for detailed analysis of financial performance. Over to you, Saji.
Thank you, Arun. Good afternoon, everyone, and thank you for joining us for the Q4 and FY25 earnings call. I'll provide you with the concise overview of our financial performance for both the quarter and the full year. Starting with the Q4 FY25 financial performance, our revenue from operations for the quarter stood at 9,678 lakh, degrew by 3% on year-on-year basis. EBITDA for the quarter reached at 3,054 lakh, and EBITDA margin for the quarter stood at 28%. Our profit after tax for the quarter stood at 1,101 lakh, and PAT margin stood at 10%. Now focusing on FY25 financial performance, revenue including other income for the year stood at 45,857 lakh, representing a slight 5% year-on-year decrease. EBITDA for the year stood at 17,140 lakh, and EBITDA margin for the year was 36%. Profit after tax for the year stood at 10,927 lakh, and PAT margin stood at 23% for the year. Moving on to the park-wise footfall numbers for the Q4 FY25 footfalls, the Bangalore stood at 2.18 lakhs, Cochin at 2.08 lakh, Hyderabad at 2.11 lakh, and then Bhubaneswar at 0.41 lakh. For the full year, footfalls for Bangalore Park stood at 10.71 lakh, Kochi at 8.78 lakh, Hyderabad at 9.31 lakh, and the Bhubaneswar at 1.69 lakh. With this, I conclude my speech and open the forum for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashwini Agarwal from Demeter Advisors. Go ahead.
Good afternoon, Arun. Quick question. How are you seeing the consumer demand situation now? Because, you said that the patterns of discretionary spends have changed. What's your assessment? What's going on?
I think for us mainly, I can't talk about other industries. For us, one of the main things was that after COVID, that euphoria. So obviously, we did not see growth after that in terms of footfalls. Revenues, if you look at FY24, was the highest, but footfalls were highest in FY23 after COVID. So we are obviously not able to maintain that growth in footfalls. But what we are seeing now is that I think we have come to like a new normal in terms of footfalls that we are seeing. And I think this year onwards we can see some mild growth, especially in our tenured parks, because again we're not expecting huge growth in footfalls from our tenured parks because they are already tenured. They've been there for many years. Mild growth only is what we can expect from existing parks. New parks, obviously, we will see bigger growth and ramp up in footfalls, and that is the way. I mean, this is something that I've said before as well.
And
Krishi spend also a little soft across sectors. I think I'm guessing it's because people have gone. There was overspending that happened in the last 2 years, and maybe people are reprioritizing their spends for other things, maybe because of inflation or other pressures. And again, I think going back to a normal schedule post the COVID euphoria could be one of the reasons. So, but these are all speculations at this point. But then I think we are seeing something like this across sectors. So I'm guessing this is applicable to not just one industry.
No, the question I had is that have you done any market studies to figure out if there's a behavioral pattern change? For example, youngsters wanting to spend more money and time on online activities versus going out with family.
No studies have shown any of those things. The only thing that we can see from the studies that we've shown is that there are more avenues for people to spend time. Now, every year new things are coming up, right? So there are new things for people to do. So obviously we'll have to compete with more things, but that's just the nature of any form of entertainment. I don't think it's unique to us. So in that sense, I don't think it's a problem. But I don't see any large change in consumer behavior. I think more issues for us is mostly climate related or related to maybe people not being able to come out because of exams or change in exam seasons and a lot of other factors. Those some are within our control, some are not in our control. So these things happen. It's just par for course is what I think. But if you look at Indian, at least our company performance, we have beat pre-COVID numbers by a big margin. Whereas a lot of other countries, if you look at amusement parks, they have not yet beaten pre-COVID numbers, even today, even in FY2025-26. So that gives us a lot of comfort that we are in a better place. But, I don't see us having an issue. You want to say something?
Yeah. Hi, Dhiren here. So I think when we look at the marketplace, obviously across industries, there is pressure on discretionary spends. But I think, yes, the fact that with COVID, people have also affinity to OTT and other entertainment sectors. If you see the concert industry growing. But like Arun said, there is, in an entertainment industry, there will be newer avenues to come. But the fact that people are stepping out for concerts, people are looking for new experiences. And obviously, us being the largest chain and providing a very unique experience, right, in terms of thrill and adventure, we're very bullish that in the mid to long term, consumers will continue to seek an experience that we have to offer. So we will stay on course to that.
My next question is that on new parks, while Chennai has been in the works and will open towards the end of this calendar year, any other developments can you share in terms of the pipeline that you have under consideration over the next 2 to 3 years?
We have at least 3 or 4 locations where discussions are progressing, which I told in the previous calls. We have not yet finalized anything just because we have also been busy with our own plans, and Chennai is also taking up a disproportionate amount of time from our end because it is a large project, and so we are focusing on that. Also, like I said, we are launching another expansion to our resort in Bangalore. So, we've been busy. But we will definitely, we would have liked to conclude at least one more location by the end of FY25. But some delays are, some of these are government delays which we can't do anything. But we are bullish that at least one or two projects we will be able to announce before the end of this year. And that is the way we are looking at it. We are being a little cautious also because like you said, there is a softening of demand and things like that. There are more uncertainties this year than expected. But we are still bullish. We will definitely go for expansion. We are looking at least one or two more projects, large projects, for us to take on, because we do have the capability to, once Chennai is finished, by that time we want to have at least one or two projects ready so that we can effectively utilize our project team to do another project. So that's the way we are looking at it. That's all I can give you as of now.
Okay. Thank you. Thank you so much. All the best. I'll come back in the queue.
Thank you.
Thank you. Next question is from the line of Saishwar Ravekar from ICICI Securities. Please go ahead.
Hello, sir. I'm audible?
Yes. Go ahead.
So my question is, sir, last time Hyderabad Park experienced their best ever quarter, and this time we are seeing the footfall. So decreasing footfall. So what are the specific reasons? Like, can you shed some light on it?
Yeah, hi, Dhiren here. So I think this is actually to the point that Arun just mentioned previously, that obviously in mature parks, there is some saturation, so the growth will not be as much as a newer parks. And Hyderabad is one of our newer parks. It's only been operational for 7 years, barring the 2 COVID years where we were shut. So there is a lot more room to grow. And that's one of the reasons why you continue to see that one of our newer parks is kind of growing and having a better year compared to the other parks because of the headroom that we have.
Thank you. So one more question is there. Sir, our numbers are showing decline in the business. So do you have some strategies to bounce back in the market in order to increase the revenue, EBITDA, and net profit?
I mean, definitely. So we are being a lot more agile in terms of our pricing, our campaigns, seasonalities. We've been building our sales. We've been building a lot more sales efficiency also to try and create more opportunities during the leaner season. So multiple strategies are at play, and we hope that some of those are fruitful in the coming year, and we see better results.
Okay, sir. Thank you.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. We will take the next question from the line of Kaustubh Pawaskar from ICICI Securities. Please go ahead.
Yeah. Good afternoon, sir. Thanks for giving me the opportunity. Sir, in your initial comment, you mentioned that some of your mature parks like Bangalore and Kochi, they will be delivering a minimal kind of a growth in footfall. So is it fair to assume that considering a low growth in footfalls in this mature park and incremental footfalls from your Odisha and Chennai park, in FY26, at least we should be doing around 8 to 10% growth in terms of footfall, and along with around 2 to 3% growth in ARPUs, we should expect around low double-digit kind of a revenue growth for 26.
For this, sorry, we are expecting between 5 and 10% growth in footfall for this financial year. It's a conservative estimate. We might do better, but we don't. I mean, it's hard to say, but it could be some. Again, we can't predict properly. But with Bhubaneswar, we are expecting better numbers this year, and then for the last quarter of the year, we are expecting Chennai to also kick in with some footfalls. So I think we are expecting footfall growth, and ARPU growth also we should expect between 3 to 5% kind of growth we are expecting.
Right. But sir, the footfall growth then, even Odisha will get mature by end of this year, and Chennai will get into the second.
This is the first full year of operations. It will not get mature. Mature in
the sense, it will be the full first year of operation.
This will be the
first full year of operation. Yeah. So considering that, and even Chennai will be getting into first full year of operation in FY27. So considering that the footfall growth should be better in FY27 compared to what the expectation are in FY26 in a stable environment. I'm not saying that.
Obviously, I mean, if you have a large park like Chennai that's going to be operating for a full year versus just a quarter in this FY26, definitely we should continue to see growth year on year, hoping that our existing parks also continue to maintain steady state momentum.
Yeah. And just related question to this is, if you see incremental growth in footfalls and stable kind of a growth in ARPUs, then should we expect even the EBITDA margins to improve from the levels of what we have seen in FY25? Should we consider FY25 EBITDA margin as a base, and then from here, we should see incremental kind of margins? I'm not expecting substantial improvement, but at least in a steady state for next 2 years, there will be consistent kind of improvement in EBITDA margins.
Yeah, the EBITDA margin at the present year is mainly dipped only due to 2 reasons. One is the addition of this new park, Bhubaneswar Park, where we have spent certain amounts for the inauguration of the park and things like that. And similarly, in the next year, obviously, when your Bhubaneswar Park will have a full year of operation, and then additional 1 more park is coming in this FY. And post that, once it stabilize, maybe some 40 to 45% of EBITDA margin will be expected. That's what the regular EBITDA margin previously, if you consider pre-COVID.
But if you see in the midterm, as we expand our parks, we will have to invest in marketing, right? Because we'll have to grow the build the business, drive footfall. Even with extending our resorts, we will have to again invest in kind of driving more occupancy. So in the midterm, there will be pressure because we're investing for newer parks for long-term growth.
Right, sir. And so one last question on the 1 more location, what we are planning to do, the 1 more project which we are planning to come up with. For that, would we require any incremental funding in terms of, equity or debt, or we would be good enough to fund it through our own internal accruals? Because at the project what we are planning to do in the coming years are equivalent to what the Odisha projects are, if I'm right. So the capex required for such projects would be in the range of 200 to 300 crores, and not similar to what we are investing in Chennai. So considering that, is it fair to assume that whatever projects now we are planning, we will be in a position to fund it through our own, balance sheet?
Yeah, we are not looking at any further fundraise. We are, I think, very well capitalized now. And also, I think by next year we will have 5 operational parks. So I think we will be in a good place cash flow wise, and we will have enough to be able to manage further. We might take on some debt if we are taking, for example, 2 projects come back to back. But otherwise, I don't think we have any much stress on our cash flows.
Sure, sir. Thanks for that.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. We will take the next question from the line of Himanshu Upadhyay from Bugle Rock PMS. Please go ahead.
Yeah, hi, good afternoon. I had a question on this Bhubaneswar. If we look at the Bhubaneswar Park, the non-ticket average price is nearly 2/3 of the ticket price, and it is in value terms also per ticket the highest among all parks for us. Are we trying to keep ticket prices low to have higher footfall and want people to spend more in the theme park, or there are few items which are not included in the ticket and hence the ticket is low but non-ticket item price is higher? Or is there something different on the strategy, and can you elaborate on your thoughts here?
Look, so if you look at our ticket price versus our 3 larger parks, it's actually at 60% of the other parks. But if you look at the contribution split, our non-ticket revenue in other parks is 27%, whereas in Bhubaneswar it is close to 45%. But our operating format is pretty much the same. Once you pay for the ticket, everything inside is unlimited. You only pay for food and merchandise, and that's the same in Bhubaneswar. But I think also because it's year 1, we're getting a lot of early adopters who tend to have a high wallet share and then hence you're seeing a higher SPH. As we continue to build the category and business, we are getting more group footfall, larger businesses across tourism markets. This should normalize a bit, but we are still bullish that the ARPUs will continue to stay healthy in Bhubaneswar.
Okay. So should we assume that as time progresses, the ticket prices will increase over a period of time, and hence this will get normalized? So that would be the thought process.
Yes, it will increase, but marginally it will increase, because I think with SPH being strong and we are hoping it might reduce with more group and larger bookings coming through, but it is still a very healthy SPH. And I think right now we want to ensure that we are able to drive more and more footfall and build the category in a new path, and we have a cushion of a higher SPH. So we will try and be a little conservative on ticket until and unless we see full capacities in our park.
To add on to that, if you see our other parks, we have about 60 plus rides in each of the parks. Bhubaneswar is having around 23 rides at present. So on the go, maybe after a couple of years, we may add up another further rides and things like that once it is maturity sort at the high level. So this is one of the reason of keeping the ticket price at high.
Also the tier 2 city. Tier 2 city as well. Spending is not that high.
Okay. So can we say that tier 2 city, this type of model would be there? Or these?
Yeah, this is our model for tier 2 city. We do a smaller size, much smaller, and less than one third the size of investment and number of attractions, and correspondingly our ARPU also will be smaller.
Okay. And the next question was, we were talking to various state governments, 4 or 5 state governments for new theme parks. Is there at some places we have decided that this place may not make sense?
We are talking to multiple state governments. But as and when there is a finality, we will definitely inform. Right now it's under discussion, so we don't want to disclose. But we will disclose whenever it's ready.
Okay. And in the last call and here also, we have spoken about dynamic pricing of tickets. Okay. It's in Q2, Q3, Q4. Okay. Can you give some thoughts here that what is the elasticity between the pricing and footfalls, and if it is too less, then it may not have impact, and if it is too more and persistent, then the people will wait for those discounts. Okay, what we generally see in many of the places. Okay, where
these are still early days. We are still, we are still experimenting with it, and also we are upgrading our entire operating system for our Wonderla park. So we are undergoing a digital transformation as we speak, and a lot of these things will be ready by only end of this financial year. So I think the full effect of dynamic pricing we will not see in this financial year. Maybe next financial year we can see it. So there are a lot of things we have planned. So I think we will be able to give you more. We are doing it manually right now, using manual methods. But I think the automatic system will happen only maybe in a year or two.
And generally, what can be the ranges? Means X percentage
Like
from
airline
top to
tickets,
bottom.
you can vary it as much as you want. We discount as much as 50%, sometimes more.
Yeah. Depends on seasonality and demand and the market conditions, right? So during holidays, obviously there is a higher demand, a lot like airlines and hotels. So then we have a very different price versus lean season versus large group bookings. So I think that kind of agility in pricing is definitely helping us drive demand. And we've also been doing this only in the last 12 to 18 months. There is a lot of learnings that we are also getting from these campaigns, and we'll keep improvising and making it more robust year on year.
And if the variation is very large, won't it impact the customer? Because he will have a thought of what he wants to spend, okay? And variations are too large. Anything what you have seen till date?
Depends on the demand, right? Like, for example, on a very busy season, you will pay much more for the same airlines. Let's say if you are going, let's say, from Bangalore to Goa during season, you'll pay at least 3x more, right? So I mean, people are. I mean, I think nowadays, that's pretty much.
And it makes sense during high demand to charge higher price because we also have limited capacities, right? I mean, we can't also overpack our parts because then wait time, queue times are higher, customer experience is poor, NPS ratings go down, and then this doesn't reflect good on the overall brand experience. So a lot like other entertainment tourism business like hotels and restaurants and flights, we will also have to operate in this model. And customers are willing to pay for it when there is a demand and a holiday season.
Okay. Thanks. I will join back in the queue.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. We will take the next question from the line of Nirav Savai from Abacus. Please go ahead.
Hi, my question is on the marketing spends during the quarter and the entire year FY25.
Yeah, marketing, this time we had certain one-time expenses like a video shoot and then the new park launch. All those things were there. So around about some 12 crores we spend as a one-time expenses towards this, various other activities including the launch, video shoot and then ESOP expenses as well.
So this is for the entire year 25, right?
Entire year.
And how much was it for the fourth quarter versus last year fourth quarter?
Last year there were no one-time expenses. This time is the first time we are having this kind of video shoot and other activities.
No, so I'm just trying to understand the marketing spend in the fourth quarter versus last year fourth quarter.
I think marketing spend this year was higher, I think, because I think we have one more park to spend on, and I think we started marketing spend early this year compared to last year. So I think some of the Q1 spends have come into Q4 of this year, last year. So instead of spending, I think that keeps changing depending on the holiday cycle.
Okay, so what was the total quantum of marketing spends in FY25?
1 second. About some 40 crores.
40 crores. And how much was it a year before that?
Year before that, it's about some 18 crores.
Not 18, 28.
Last year.
28 crores. So this 12 is something which is incremental, which has gone behind marketing.
Yeah, this includes the launch expenses, Bhubaneswar, and then...
Extra would have been 10 crores?
Yeah, 12 crores we spent.
12.
Okay. And this, the new resort which you have been talking about in Q1 of FY26, now, is it a addition to the existing one, or what exactly is this, and what are the number of beds and total capacity in this?
It's an extension to our existing resort at Bangalore, which is having about 39 keys, a premium version to that.
Okay. So this will be from the first quarter of 26.
Yeah, first quarter of 26.
Right. And then how do we see the OPEX part of it for FY26? With Chennai Park also planned in the third quarter, let's say there's 40 crores of marketing spends which we have for 25. How much have we budgeted for 26?
26 about some 5 to 10% hike will be there. Apart from that, we'll have a launch expense and Chennai Park related expenses will be there.
So with Chennai Park, should we assume about 60 odd crores? Would that be a number, or can be even higher?
That is little too early. We are just concluding the budget for the Chennai Park. Towards the end of maybe Q2 or maybe towards the end of Q3, we should be able to take it.
Right. Got it. All right. That's it from my side. Thank you.
Thank you. Next question is from the line of Kashyap from Credence Wealth Management. Please go ahead.
Yeah. Hi, so I just have one question. Given the change in the demand outlook, is there any change in the guidance for our Bhubaneswar park for being EBITDA positive?
So there is no guidance. Only thing is, we are trying to attempt to fulfill the footfall. At present, it's at 1.7 lakh in this year, and with some 10 months of operation. And then going forward, we'll have a full season this time. So once we conclude maybe a Q1 or something, we can give a sense of it.
Okay. And nothing on. Definitely we won't be able to give numbers for even Chennai, right? Or just a guidance on EBITDA or something.
We'll have to wait for 1 year at least for us to give any kind of numbers.
Okay. Understood. Yeah, that's it.
Thank you. Next question is from the line of Ayush Chabria from Shravas Capital. Please go ahead.
Yeah. Hi. Am I audible?
Yes.
Yeah. Hi. So I just wanted to understand what is the ARPU you were looking at once the Chennai park gets commissioned? Like any range you'd like to provide?
It's similar to our existing park, but then we may not be fully ready in Q1, so we might have to give a discount if we are not fully ready. So again, hard to predict. But at a steady state, I think our ARPU will be maybe marginally higher than what we are charging in Bangalore. So that's what.
You can take a sense from the Bangalore park. About 1,500 is the ARPU level at Bangalore. So you can take a sense from that.
All right. And also,
we might have a higher discount and things like that.
All right. Also, what kind of footfall do you see something like Hyderabad replicating again in Chennai? What is your sense? Do you have any kind of commentary on that?
Hard to predict. I mean, it could be like Cochin, where we have profitability in the first year. But if you look at Bangalore and Hyderabad, the profitability came in the third or fourth year. So it's hard to predict exactly how each market will behave. But for a large park, we are expecting 1 million plus footfalls per park. And small park like Bhubaneswar, we want at least 5 lakh footfalls once we reach 5 to 6 lakh footfalls when we reach a steady state. Now, how long will it take to get to that point is debatable. But we are hoping that in the 4 or 5 years, we should be able to get to that point.
Also, any color on what kind of footfall do you expect in Bhubaneswar in the coming year? Barring all the external factors, in general, what would you expect for the coming year as well?
5 to 10% footfall growth we are expecting this year.
That is only for I'm just asking for Bhubaneswar, not the entire footfall growth.
Bhubaneswar, we are expecting around between 2.8 to 3 lakh visitors this year.
All right. That will be it for now. Thank you.
Thank you. Next question is from the line of Ranodeep Sen from MAS Capital. Please go ahead.
Thank you for the opportunity. My question was regarding while our current approach is to focus on maybe one project at a time. Is there a school of thought around adopting a more aggressive strategy of pursuing maybe 2 to 3 projects across different cities simultaneously to accelerate our growth and brand presence?
So we have the capability to do multiple parks simultaneously, but 3 parks will be slightly difficult because first of all we need to sign agreements with the 3 authorities to construct the park, and then till that time we need to pay salaries and things like that. No? So at present we are looking at a capacity to develop 2 parks simultaneously, and then once we have an opportunity we can easily scale up. We have connections and then we have the bench strength and things like that. We can do that little later. As of now, 2 is enough. That's what our outlook.
Sure. My next question was, Bharti Real Estate recently announced that they're interested in exploring indoor amusement park space and they're exploring potential partnerships. So just wanted to check if Wonderla is evaluating opportunities in this segment, and are we considering any initiatives for indoor amusement park space?
Indoor amusement park is a different, it's a smaller business. In our view, it's not really, a full-fledged amusement park business. So we are not looking at indoor parks from a strategy point because we are specializing in large format parks, and that's what we want to specialize on.
Sure. My last question.
We don't see revenue potential in indoor park. It's not. I mean, we can generate almost 200 crore a year revenue or 250 crore a year from a large park. Indoor parks, you will not be able to do that.
Got it. Sure. Just my last question. With music festivals and immersive experiences gaining popularity with the growing Indian Gen Z audience, is it worth exploring the idea of utilizing our existing land parcels to develop a permanent venue?
We are constantly doing concerts, and we are also developing our own virtual rides and things like that. VR-based technology we are using quite a bit now. In fact, our latest ride is a very unique ride that we have done. I don't think any other company has done a ride like that yet. So I think we are also doing it. So yeah, I think that is an area focus area for us as well.
Sure. Thank you. Appreciate your responses.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. Next question is from the line of Ayush from Sagun Capital. Please go ahead.
Am I audible?
Yes.
So my question is regarding the expenses of Chennai Park. The QIP which you have raised of 390 crore you have allotted in it, only 75 crore has been yet spent in the Chennai. So my question is, before that nothing was spent there, or this is the first time you have spent in Chennai?
No, Chennai Park, the total budget is about some 515 without taxes. Including taxes, it's about some 610. So out of it, 390 is what we propose to spend from the QAP. And then out of it, 75 crore supposed to send in FY2025, which has been spent. And then the rest of the money will be utilized in this current FY.
Okay. And sir, my another question is regarding the Bhubaneswar Park. When it will be matured, then what is the peak revenue you guys are expecting from this park?
The Bhubaneswar may take some 2 to 3 years. Like generally any park, for that matter, to get a maturity level, it takes further time. But to get a stability, it takes three months at least to understand the pattern and things like that of the customer behavior and things like that.
And any guidance on how much?
10 months yet to complete full cycle, then we can at least learn certain things.
Okay. And there is one more clarity I want. Right now we have only one resort in Bengaluru. Is there any other resort in park?
Eventually, yes, we will plan. Right now, we're focusing on Bangalore. Once we have our model ready, then we will explore other cities.
And about the keys, sir, can you give me the total keys in Bengaluru Park resort?
One total keys, sir, is 84 keys plus 39, 123.
What? 84?
123. 23.
Okay. Thank you so much, sir. That's all from my side.
Thank you. Next question is from the line of Hinduja RS from LKR Advisory. Please go ahead. Hello, sir. Hinduja, sir. Are you online? Due to no response, I would now like to hand the conference over to the management for closing comments.
Thank you all for attending the Q4 FY25 and full year FY25 results update of Wonderla Holidays. We are bullish on our segment, and we continue to expand into the sector in new geographies. FY25 and FY26 promises to be an exciting year, and we look forward to sharing results with you guys soon. Good afternoon. Thank you.
Thank you.
Thank you.
On behalf of Ambit Capital Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.